Hey everyone, Coach Investor back to another video for today. So let's talk about two growth stocks that have been hit lately, especially after the FOMC meeting. But we will see on the graph that both of them have already started their decline a couple of days, if not weeks beforehand. Now, of course, there are lots of stocks, lots of high growth stocks that have been hit hard, especially in the fintech industry. But most unprofitable, most growth stocks, tech stocks have been hit lately because, well, we're going to be in an environment where interest rates are probably going to stay higher for a longer period of time, and we might have another interest rate hike later this year. So, stock number one I want to talk about is a stock I personally own right now just for the short term because I do think that it is looking extremely cheap, and that's Robinhood. I've talked about Robinhood already in the past. Here, this is on the daily chart. You can here again see a small gap here from Wednesday to Thursday. Wednesday FOMC meeting, of course Thursday a big red day, so you see that gap right there. On the daily we are also now oversold. MACD is bearish. Now zooming out on the weekly here, we still have higher lows from back in June 2022, December 2022, then May 2023. Let's see how low we go this time, but currently this trend is positive, although in the short term we have taken quite a hit. Now, why do I like Robinhood specifically? I'm not going to go over the whole thesis right now. I've covered this a couple of times on this channel. Those videos will be in the top right corner. Right now, a market cap of just under $9 billion. They, of course, have just over $6 billion in cash. So again, it makes no sense for this company that is growing still pretty fast to be this cheap. Currently a forward P of 22 times. I expect them to become more profitable over time. The trajectory here, as you can see, of course, we had a huge boom during the pandemic, then a decrease across the board, but we can see gross profit margin is improving. Free cash flow per quarter is positive. The current average price target from analysts sits at $12.90, representing 32.99% upside. We also know that the VIX has increased in the last 5 days close to 18%. And of course, volatility is a pretty good friend of Robinhood. Then earlier in September, we had this news here. This was actually supposed to be extremely bullish for the stock, but apparently the market didn't really care that much. Robinhood will buy back Bankman-Fried's stake from the US government for $605.7 million. Back then, that was around 7% of the shares. And yet, right now, the stock is down even more. Okay, sometimes the market just doesn't make any sense, but this was extremely bullish. Now, in the meantime, we also got some news from the August numbers. So net cumulative funded accounts at the end of August were 23.2 million. That's up approximately 30,000 from July. Monthly active users decreased yet again to 10.6 million after they actually increased in July. Assets under custody were down a little bit in August. Those reached $89.7 billion. But what's very important here is net deposit. That continues to be a very good number to look at. Net deposits were $1.6 billion in August, translating to a 20% annualized growth rate relative to July 2023 assets under custody. And over the last 12 months, net deposits were $17.6 billion, translating to an annual growth rate of 25% relative to August 2022 assets under custody. And then looking at cash sweep balances at the end of August that were $13.3 billion, that's up $600 million. So of course, it might be that the market right now is just looking at monthly active users, and that's about it. Of course, interest rates are playing a big part here as well. We've talked about that before. High interest rates environment, not very favorable for fintech players, but hey, for long-term investors, I do think that you should be having a look at Robinhood right now, the company, the investment, whether it's for short or long-term. I think the price right now is extremely attractive. Now, last thing here is, of course, the numbers that we've seen in the last earnings report. Now, total net revenue were $496 million. That's up 10% sequentially, primarily driven by higher net interest and seasonally higher other revenues. Of course, right now, high interest rates for a company specifically like Robinhood, they have benefited from that. You can clearly see this Q2 2022, $74 million from net interest. Right now we're sitting at $234 million. And of course, all of that flows to the bottom line. So you might say, becoming profitable in a high interest rates environment? Well, not so far-fetched. But on the flip side, yes, we have seen transaction-based revenue go down. Well, go down. It's basically flat here on average. But yeah, in these types of environment, they benefit from one side, but then they take a hit on the other side. But like I said, currently VIX is going up a little bit, should benefit a company like Robinhood. And in case you forgot or didn't know, last quarter they reported $25 million of net income. It's not net income loss, it's net income. And so with Robinhood, I think it's just a matter of when, not if, the market will notice that there is a lot of value with that name. Of course, you might be one of those that say, look, what they were doing during the pandemic with GameStop, with AMC, I won't forgive them, so you're not buying the stock. Okay, fine, you can skip that one. And maybe the second pick here might interest you. Now, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. Trying to reach 30,000 subscribers by the end of the month, so maybe hit that subscribe button, helping me out a lot. Thank you very much. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Stock number 2 is a pretty popular stock, very, very big in market cap compared to Robinhood, and that's Shopify. Now, Shopify, since the start of September, is actually down 20%. Now, while you might say RSI is still pretty neutral, I mean, why should I buy right now? The stock, yes, might be in an area $50 or so where there was previous support. I still think it's pretty expensive. Okay, all good arguments. I do want to show you one thing here, and that's the fact that, well, we had that huge gap here, 30th of August, huge gap up, right now has been completely filled, but here, yet again, Wednesday to Thursday, we have that small gap here after the FOMC meeting, and yes, maybe $50, $51 or so might look like a good buy option, good support if it holds. Now, if we look at Shopify, the numbers right now compared to the last 8 years since they went public, well, we're looking at a market cap of $68.15 billion, forward PE of 75.9 times, definitely not on the cheap side. I mean, year to date, it's already up close to 53%. But if we look at PE, EV to EBITDA, price to sales in the next 12 months, and then price to free cash flow in the last 12 months compared to its 8-year mean, we can clearly see that for PE, we're now much cheaper than before. EV to EBITDA, the same thing there. Price to sales, basically half. Price to free cash flow, I mean, it's lower, but not as low as you would want it to be. But, I mean, if they continue the way they're operating right now, I believe that free cash flow will start to increase much faster than before. Because if we go and look at the latest earnings report, we can see your free cash flow was $97 million or 6% of revenue, compared with a negative free cash flow of $87 million or 7% of revenue in the second quarter last year. So already a huge improvement here. Now, they didn't stop there, because they say here that free cash flow profitability for the third quarter of 2023 is going to be greater than the entire first half of 2023. So you expect that price to free cash flow number to become much better, especially if the stock continues to go down. Now remember, we've seen that huge gap up at the end of August. What actually happened there? Well, August 30th, this came out. We already talked about the aspects for Amazon, but yes, Shopify merchants will be able to offer Buy with Prime directly within their Shopify checkout. Of course, we know that they tried their own logistics thing with the acquisition of Deliver. They sold that completely. They still have a small stake in that, but now, I mean, this move is just a no-brainer, especially if you know that Shopify merchants will have the choice to offer their products to Prime members on Shopify for the first time ever, while continuing to maintain 100% control of their brand and their customer data in Shopify's admin. That was very important for that partnership. And if you watch my video on Amazon, if not, that will be in the top right corner, but you can see there the clear results of offering the Buy with Prime option. Sales go up, conversion go up, the cart value goes up as well. So this was a no-brainer. And since Amazon has invested a lot throughout the years in their logistics business and they're expanding that as we speak, this was a win-win situation. Last thing I want to touch on with regards to Shopify is the Drake collaboration. Of course, this is an article from back in July, but if you look on X, if you look on YouTube, you will see a couple of videos where at Drake's concerts, sometimes you might find QR codes on the side of the building. You will be able to scan those QR codes and then you will be sent to a website, of course, built on Shopify, where you might be getting special products, limited release products directly from Drake. This collaboration is just the start. There will be many, many more out there, many other virtual worlds where you'll be able to virtually shop and get real products from that. Collaborations with Mr. Beast, Drake, probably others in the pipeline as well. And this is something that is very unique to Shopify because deep down, this is a very, very big tech company that is dealing with e-commerce. But since they can move extremely fast, these types of collaborations are possible and are extremely unique and bring in lots of sales volume. We can already look at some results here. So powered by Shopify Collective, Drake related has seen stellar results, simplified partnerships with a more straightforward way to connect with like-minded brands, fast deployment, setting up brand collaboration on its website in just 20 minutes, efficient audience growth with 72% of sales, including products sourced through Collective, coming from first-time customers. And so with the stock already down 20% in September, of course it can go down a little bit more, but I do find this stock right now way more attractive than it was before. Now, of course, do share your opinion down in the comments below. Have you been looking at two particular companies lately? Let me know down in the comments section. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.